Another advanced look into the usage of volume profile and the methodology is just plotting your levels on in advance. So we're looking at the pound yen, one of the fastest currency pairs, and I see the previous high on the weekly sitting right here. If you notice this, sitting right in this area. Okay, and the market is trying to break it. However, there's a lot of resistance ahead of us. If you look at the volume profile and the way it's constructed, let's look at the 1-day profile. 1 day being the daily on a minute chart, meaning it's more intraday and it's more accurate. If you're looking at that, we've seen that the market is trying to escape from this area and trying to get into this lower volume area. This whole area creates a level of resistance, okay, to the market. Now, you have to be aware of this. So the next level that I'm seeing that the pound yen might kind of retrace from, it could be this level here on the volume profile. Okay, and it is kind of okay with me to use if I'm looking at a short, of course, because we have to have stop losses in this area, so it's reasonable, and also it's peaking above the previous high here. However, as I mentioned in all my lessons, the more we have evidence in our favor, the better. So if I plot my Fibonacci levels from the top to the bottom, looking at a resistance level, you see how the Fibonacci, the 78%, is trying to hold it back. Okay, and then again you look at a smaller chart, for example, and you could determine the resistance. Now, the idea behind successful trading is not only picking the levels and knowing these levels, is how to use these levels and how to minimize your stop losses. If we know that there's a level on top of the area that we are trying to trade from, short for in this example, and if we know that this is a continuation zone, let me mark it so you know. If we know that this is a continuation zone, right? Why do we have a stop loss here if we're shorting from this area? So we have to be aware of these things. And same thing with the smaller chart. The smaller charts will help you dissect the move better and use even a smaller or tighter level for a stop loss. Okay? And of course, by zooming out or zooming in a little bit, you see this is the level, we call this the throat. Here, this area, this is a throat, the very low point, and then above it and below it we have ascending and descending, I would say volume or contracts, as you see, ascending, descending. But if you zoom out a little bit to get more, to dissect it a little bit better, you'll realize that this is the level that absolute, not absolute, there's nothing absolute, but this is the level that you don't want your pound yen to go into if you're shorting this area. Okay, to me this whole area is I don't like personally. I don't like the market. If once the market gets into it, I don't like to go against it. I mean, this is a continuation zone, although it looks like a low volume, but this is a continuation zone, right? It's low volume. There's not much resistance. I'm talking about long term. I'm not talking about hourly or minute. I'm talking about very long term. So it's either going to be in this area or I let it go. The idea behind looking at multiple instruments to trade is this: is if you're not comfortable with a trade, or if you're not comfortable with an entry, let it go. Look at something else that is more probable. There are difficulties in this area, in this trade. Yes, it might look like okay, we're good with it. But look how many times we honored this level. And again, we had high here, and if you look across, you will have a lot of levels that actually poked into this area. So yeah, if I want to try it, and I have to look at a very small chart, 60-minute chart, and try and manage my trade accordingly using the same methodology, the same idea of volume profile, and safe trading.